So in this video, we will review different types of crypto funds. We'll explore how to differentiate a bad fund that kills its projects from a decent fund that makes them prosper. Then we'll do a deep dive into top 3 best crypto funds. And at the end, I'll give you tools to track the investments of those funds into early stage crypto projects. So watch till the end. And before we jump in, welcome to Vesper channel. My name is Arseny. Don't forget to smash the like button and follow the channel if you haven't done so already. Now, finally, let's get started. So in general, there are 2 types of funds: hedge funds and venture funds. Hedge funds are focused more on buying and selling liquid crypto assets. So in essence, they're pretty much like you and me. They try to buy an asset at a lower price and then sell it later at a higher price. That's not really interesting for us. Now, the second type of funds, venture funds. Now, venture funds, they invest in projects at an early stage and they tend to do a more prolonged investments for a long term. And this type of funds is interesting for us, regular investors, because if you can track where big funds, big, huge institutional investors put their money in, you can track their strategy, you can emulate their strategy, and be a more profitable investor. Or in other words, step on shoulders of a giant. And in this video, we'll focus on them. Now, there also are different tiers of funds. There are bad funds and really good funds. And we can split them up in 3 different tiers. So tier 3 fund, or the worst quality fund, is the fund that exits from a project early and sells out all of the tokens during a token generation event. And by doing this, he dumps the price down. And in essence, this really harms the project but makes profit for this bad fund. And unfortunately, there are a lot of sketchy and unethical funds in crypto, so be really careful. Now, a decent fund, or a tier 2 fund, is the fund that also goes for a long term and definitely doesn't sell out all of the tokens during the token sale, but it gives nothing else aside from money. So it just provides the investment, provides the monetary help to a project, holds tokens of this project for a while, and then sells them at a later date, but doesn't dump the price down by selling out all of them during a token sale. And now the best funds, or tier 1 funds, are crypto funds that provide not only monetary value to the project through just giving money, but they also give a lot of non-monetary bonuses like networking, mentoring, useful connections. They can even connect this project with a good exchange for a successful listing. And in this video, we will do a deep dive later on 3 best funds from tier 1 funds. So like really leaders of this game. Now let's quickly go over some important statistics so that you can get an idea of where right now venture investing is in crypto. Now the first point, so the number of investments fell down from the previous year, month to month, by 30% from the last year numbers. But this is not a bad sign, because right now we are undergoing a bear market, and a year ago we were enjoying a bull run. So although the numbers are lower than a year ago, we're still in a winning position, because this time last year the crypto was growing and everything was growing, everything was on hype, and right now everyone is depressed and there is a lot of fear, doubt, and uncertainty. So we can see that the game is steered in the right direction. If we look at the breakdown of those investments, we can see that most of them were in infrastructure, NFTs, and DeFi, and the lowest fraction of investments was caught by SocialFi, DAO, and Metaverse, which is not a good sign for Decentraland and Sandbox. Now, the average assets under management of crypto funds, or AUM, saw a 2-fold increase, whereas the total AUM of all funds grew only by 8%. And this means that smaller funds funnel more, they invest more money in projects, whereas bigger funds wait for their returns. Now, the last interesting point is that the average assets under management, or AUM, of crypto funds saw a 2-fold increase, whereas the total AUM of all funds grew only by 8%. And this means that smaller funds funnel more, they invest more, whereas bigger funds, they didn't invest, put more money in the projects over this last year. Probably this is because they're still waiting for their returns from the previous investments. Now, the first fund that we'll review is Pantera Capital, which is the first US crypto hedge fund. So Pantera This word exists in Ukrainian, so in Ukrainian, Pantera is this big cat. But when I looked up this word in English, it turned out that it doesn't exist. So comment down below what's the name of this big cat. Now let's get back to Pantera Capital. So in 2013, Pantera became the first cryptocurrency fund to launch in the US. As of today, Pantera's assets under management stood at 5.1 billion. This is insane. This is really a lot. Just to give you a point of reference, the GDP of Ukraine stands at around $150 billion. So their assets under management are like a half of a monthly GDP of Ukraine, which is one of the biggest countries in Europe. So these guys are big. So Pantera Capital, as said before, is a crypto investment fund that provides investors with a wide variety of capital allocation options, ranging from illiquid venture capital assets to more liquid assets like Bitcoin and other cryptocurrencies. And these guys, in fact, have 6 different funds, but these 6 funds can be split up into 3 general categories. So it is venture equity, which is investing in nascent companies at an early stage when there are no tokens yet. This is similar to equity, but instead of buying a share of a company like in equity venture investing, they acquire tokens that already exist. And the last type of investments that they make is liquid tokens, which is actively trading tokens like Ether, Solana, and etc. So this is more like a hedge fund approach to investments. They just buy and sell them at very high frequencies using different algorithms. Now, I've looked and read through the presentation of each fund that they have, and I found a very interesting point, an interesting lesson that all of us can borrow from Pantera Capital. So in their liquid token fund, they use a strategy when they invest at the same time between 15 and to maximum 25 liquid tokens at any point in time. And this is a very important lesson. So a huge fund with a huge team of professionals, they don't diversify in more than 20 assets. And me, for example, if I open my account on any exchange, you will see there like 100 different tokens. And these guys, and I'm just like one person, not a professional investor. And these guys, they have only 20 tokens at maximum. So my next most urgent task after completing this video is gonna be go to my exchange account and just get rid of all of those trash coins that I have and just focus on 20 most important ones. Now, when it comes to their alpha, or what allows them to beat the market, it is their non-monetary aid for projects like networking, mentoring, marketing, and connections with exchanges and other institutions like marketing agencies that they have and that they will provide to a project. And also they have a badass team that understands blockchain technology on a fundamental level. And since they were established, they have invested in more than 90 blockchain companies, and they've made 100 early stage token deals such as 1inch, Arbitrum, Balancer, and other very famous and most prominent projects in crypto that you probably have heard of. Now, for Pantera Capital, that was it. Let's move on to the next great fund. The next fund on our list is Andreessen and Horowitz. The acronym is a16z, and this is how all people in crypto call it. And this fund is Solana and Avalanche early investor. So Andreessen Horowitz is one of the most influential venture capital firms in Silicon Valley. The tech-focused investment company, aka a16z, was founded in 2009 by Mark Andreessen and Ben Horowitz. Today, a16z has $30 billion in assets under management across multiple funds. And to give you a reference point, again, if we come back to GDP of Ukraine, which is $150 billion, in essence, they're managing 1/5 of Ukrainian GDP. That's crazy. So the company began investing in cryptocurrency in 2013. In May 2022, a16z announced its 4th crypto-focused fund worth $4.5 billion, taking its total crypto funds raised since its inception to over $7.5 billion. Some of a16z's crypto investments are in Layer 1 network Solana, in stablecoin protocol Maker, in Avalanche creators Ava Labs, in NFT platform OpenSea, in Axie Infinity Developers is the biggest blockchain game out there, and also they invested in cryptocurrency hedge fund Polychain Capital. So this fund, a16z, is so big that they have invested into another fund. The third and the last fund on our list is Sequoia, which is tech-focused global investing giant. So one of the most prominent names in venture capital sector, California headquartered Sequoia Capital is a technology-focused investment company founded back in 1970s. By the way, Sequoia was one of the first investors in Apple back in 1970s. Over the years, the company has invested in world-renowned companies, including Cisco, Google, Instagram, Airbnb, Stripe, and Zoom. In February 2022, Sequoia announced the launch of a $500 million fund to primarily invest in cryptocurrency tokens. The firm has invested in many crypto-native companies, including exchange FTX and Polkadot-based DeFi network Parallel Finance. So that was it for funds for today's video. Obviously, there are many more great funds, but these three are one of the biggest ones. A16z and Sequoia have invested not only into crypto companies, but they have a long history of investing in regular companies from more traditional sectors. But still, most of the time they invest in technology companies. And finally, I'd like to give you a tool that very few crypto investors know about, but it's gonna bring you a lot of time returns further in future. So crypto funds don't always update their website with every new investment they make. So DAO metrics comes in handy for keeping up with them. There you can find a table, and this database updates on a daily basis, and there you can find new investment rounds that crypto companies have raised. Another option to track investments of big funds is to follow my Telegram channel, where every week I publish fresh investment rounds raised by crypto startups. So you can either follow DAO metrics or just follow my channel. Instead of looking through the table every single time, just once a week you're gonna get like a digest of the most important investments that were made in crypto startups. So thank you so much for watching this video. I hope that you found a lot of value in it. So smash the like button, follow my channel, join Vesper Nation, and be on top of crypto game. See you in the next videos. Have a nice day. Bye.